Okay, cool, guys. Now I want to talk about psychology. I'm not going to talk too much about psychology because we already spoke about this on the basics. So, okay, cool. These are the things I want you to consider when it comes to psychology. The first thing I want you to consider is backtesting, guys. You see, the thing about backtesting is if you backtest a strategy, it gives you the confidence. It boosts your confidence because now what's going to happen is you know that you've tested the strategy multiple times on demo account, maybe 100 times, and this strategy has gave you the same results over and over. So every time you see that same setup on the charts, guess what you're going to do? Guess what you're going to do? You're going to execute without any hesitation because now you are confident enough to actually take the trade because you know the trade is going to work. If it doesn't work, the next one will. Eventually, no matter how many times you lose the trade, you know that you are going to become profitable on the long run. That is the benefit of backtesting. The other thing about backtesting is that it keeps you off the chart and it keeps you out of taking unnecessary trades. You see, when you're not sure about your strategy, everything that looks like what you learned seems like a right thing. You understand? So if you backtest, it's easy for you to identify those working setups. But if you don't, you will take anything that looks like what you know, and then you eventually find your account in drawdown or taking major losses, unnecessary risk. You won't manage your risk properly because you never tested your risk. You never tested anything. You just went from the course and thought you had the information, never went to the chart to backtest and actually practice what you learned. You just went in straight with a thick head. Now you find yourself in trouble. Another most important thing is fear of missing out, which is FOMO. I spoke about this part on the beginner's guide. I'm not going to dwell too much about it, but I'm going to talk about it analytically. The chart is designed to cultivate your greed. So what's going to happen in the chart, you'll know that you have a level of support, excuse me, I mean a level of resistance, and you know that when price gets here, you're going to sell. Guess what price does? Price gets to this level, bounces off, you think you're in profit, maybe you add, maybe you leave, and then price just shoots above this level. You understand? Then later comes back down, you understand? And now price stopped you out. And now you're seeing it dropping like this. You think, let me jump into the trade. Guess what the price is going to do? Price is going to come back to previous resistance and retest before shooting down. So this is why it's important to actually backtest your strategies, backtest support and resistance, because price actually does these things in the chart. When it gets to when it gets to a resistance level, it wants to manipulate people out, and the only thing you need to do is to wait for confirmation that it's going to the downside. Once you see that impulse to the downside, okay, mark your area. Where is the last previous high? This one. You understand? This one and this one. So you know the price is going to come either in this level or on the order block that's in this level. And then you place your stop loss there. Because you saw that confirmation, you no longer have fear of missing out. That's why it's important to backtest so that you can identify these entry zones. So in other words, I'm saying that price does do that when it comes to support and resistance level, especially crucial areas where market makers know that there are a lot of people jumping into this trade now and we are going to manipulate. Or the other thing, you see price before it comes to resistance, it plays around here, it gives you weak rejections. You think, maybe price is not gonna come here. You take that sell, and then price moves down. You think you're in profit. Then price goes to that area and then does the same thing again. This is how people get confused. This is how, because of fear of missing out, the market makers cultivate your greed to an extent that you have no confidence in your trading strategy. So now the thing is, you need to look out for these things and actually backtest so that you understand what's going on. If you backtest, you eliminate this section here, fear of missing out. So yeah, guys, that's it for psychology. I don't want to talk too much on this because I know this one can be a very long and interesting topic. Sometimes it can seem like a lecture and stuff like that. But anyway, that's it for psychology. Have a great day, guys. Yo, welcome back, guys. If you see my face right now, it means that you completed the entire course. So I'd like to congratulate you on that, and now you're basically one step to being profitable in the Forex market. So the one thing now you need to do is to go to the chart, implement what you learned step by step, guys. Remember, first thing you need to do, first place your 10 trades and write them down, mark off your mistakes and place the other 10 trades and try not to implement the mistakes that you did on the previous one, and do that continuously until you find consistency, because this thing is always going to try to confuse you. Market makers are out here to take your money, guys. They don't want your experience, they don't want your whatever skill that you have, they just want what's in your pocket. So yeah guys, go to the chart, learn how to navigate, learn and understand how these guys are actually manipulating the market, and then you can jump into your real account. With that said guys, have a great day, enjoy yourself, have a great forex trading journey. Hey, goodbye, bye guys.